Hello, everyone. Thank you for joining us today. I'm Marche, the webinar director here at Advice Chaser. We're so glad you are here with us today. Before we introduce our guest and get started, I do need to do a bit of legal housekeeping. Advice Chaser, the host of this webinar, is not a registered investment advisor. We cannot and do not give financial advice. Today's presentation is for educational purposes only and cannot be considered advice for any person's individual situation. Advice Chaser regularly hosts informative webinars such as this one, featuring a variety of knowledgeable professionals, many of whom are licensed advisors. Any opinions, ideas, jokes, or principles expressed by presenters are their own, and however true, funny, or interesting are not endorsed by Advice Chaser. Please do not act on the information here today without consulting a qualified financial professional. We are thrilled to bring you today's educational presentation. Attendees are muted, but we do encourage you to ask questions using the chat box. And the presenter will answer those queries during or after the presentation today as appropriate. If you ask a question in the chat box, go ahead and leave your phone number and email as well. And if we can't get to your question during the event, we'll make sure someone reaches out to you. We want this experience to be as educational as possible, so please don't hesitate to ask for clarification or expansion of the material. Well, I'd love to introduce you to our guest today, and let me just get to the next screen here. Lili Vasileff is a nationally recognized expert in divorce and wealth protection as a practitioner, leader, author, writer, and speaker. She is sought after for her seasoned experience and deep knowledge about complicated financial issues in divorce and wealth protection management. Lili is regularly consulted with and called into high net worth legal proceedings that have national recognition. She is one of the distinguished trailblazers of divorce financial planning, who has been a catalyst in developing a professional niche that has led to an international movement and thousands of practitioners today. And we are thrilled to have you back, Lili. I know that you've spoken with us before. We're really excited to dive into this topic about starting over after 50 and financial principles for divorced women or women planning divorce. So I'm just going to go ahead and turn the time over to you. Thank you so much for being here.
Oh, it's my great pleasure. This topic is really near and dear to my heart. This happens to be the only segment of the population that has a significantly increasing rate of divorce. In fact, divorces for age over 50 have doubled in the last decade. And it's 1 in 4 couples, I believe, that literally over the age of 50 are going through a divorce. It's a timely topic. It certainly is a crucial one coming out of the pandemic, also with the volatility in the stock market and being on the cusp of retirement. So hopefully you're going to glean a few tips from this webinar of how to keep your eyes and ears open to your financial security and how to gain more confidence or when you go through this transition. Divorce is probably the single largest financial, emotional, legal transition that you will have in your lifetime. And interestingly, if you think you might be immune, 55% of divorces over the age of 50 are for long-term first marriages of over 20 or 25 years. I think one of the first things to ask yourself is, as you approach this transition, if you have planned for it or it's caught you by surprise, take a reading of your own feelings. There are going to be so many challenges you face. One of the most important things is to stay focused, to write yourself a roadmap at the outset of what your goals are so that you're not distracted by emotions, distracted by legalities, distracted by minutia. Keep your priorities very clear. and recognize that you're going to have certain feelings, such as, do you feel very capable, but you actually feel inexperienced or unfamiliar with financial matters? Do you want to learn, but you need some help? Do you want to be responsible for yourself, but you don't know how to plan your own goals? Or you might need more guidance than you think. Do you need help gaining confidence in how you approach financial matters? And do you need help selecting your team or a financial advisor? We're going to illuminate some of these opportunities for you and what you should really take in as guidelines and or takeaways from this webinar today. I think it's really common for individuals who have not been knee-deep in planning for the long term. Most individuals know the day-to-day bill paying, bookkeeping, what's coming up in terms of a necessity or a capital improvement. But planning for the longer term tends to be, for this age group, a very delegated role. And if you haven't been included by either your spouse, soon to be ex-spouse, or an advisor to you as a couple or to your spouse, it's time you sort of dig in. There are no excuses going through the divorce process for not knowing about your financial affairs. So if you're feeling vulnerable and you're feeling scared and even resentful that you're in this position, it's common. If you're not happy with the idea that you have to become financially independent and responsible, you're not alone. And even if you want a divorce, and statistics show that women in this age group are the ones who tend to initiate the divorce, even if you are that one. Maybe you didn't really think about the longer term impact financially to you or what it actually means, and you need some help. I think part of the triggers that support the initiation of divorce at this stage in life include there's a longer life expectancy, there's declining disability rates, better health. You may have had a career at some point and want to rejuvenate that or reinvigorate it. But on the other side of the coin, finances are going to be more complicated because you are older. And the decisions that you make around these financial issues in divorce are often one-time decisions. There are no redos. So to be prepared, to be present at the table when you start negotiating is absolutely paramount. It's really easy to hold on to what's familiar, to hold on to the knowns versus start pecking away at the unknowns, right? I mean, for example, and I can't tell you how many of my clients fall into this. You know, my husband, I'm going to be gender biased in this particular example. My husband, you know, he must be the smartest guy I know in finances. He's always steered our finances. He's taken care of us. We've never gone without. He's probably the smartest guy in the room. You need to be really careful because he's really sharp. He's handled the money. He's done well. Maybe he should just continue doing it for me. I mean, he's taken care of me before. Why won't he after my divorce, our divorce? Well, what if the husband says, you know what? I don't want to. We're going to be divorced. It's time you step up and take care of yourself. And that means learning something that you need to learn about. Why am I on the hook to do it? Or the alternative is, you know what? We're no longer together. We are going through this process to disentangle ourselves financially, to lead separate lives. So wake up and smell the coffee. For you, what it really means is, how do you gain your confidence? How do you think about what you need to learn? How do you set aside patience, energy, and time during a period of transition where you can start to learn these things for yourself. The key objective is to not feel vulnerable, to feel more in control and take back that control. So we're going to share with you a few of the interview tips with a team that you can build. And often asking for referrals is so helpful. But before you even get to that step, you need to know yourself. You need to know what helps you sleep at night, what certainty is important to you, what you are capable of considering in terms of variability or changes, or who you can rely on as a sounding board for exploring and being curious. It all is a new world. And you know what? It's exciting. Some of the critical points that I think you really need to focus on that are essential for when you sit at this table and you start negotiating, and to know what your needs are. And sometimes there's enough resources to share that not only do you meet your basic needs, but you can meet your interests and you can start planning forward. So what do divorced women need to focus on? There are 4 key points here. Replacing lost income. You used to have one household and now you have 2. That means you're sharing the pot of income. Cash flow, timing of the cash flow. When do you have access to any sources of income? Is it daily? Is it monthly? Is it quarterly? Is it annually? What about health care coverage? Oh my gosh, this is such a big topic, especially when you're over 50. What are the sources of health care coverage? If you had a spouse that was employed and you were under their health insurance, how and when and at what cost is that available to you? If not, if you have private insurance, does it cost differently for you to separate yourself from your ex-spouse as a member of that policy? And when you're looking at managing assets, you know how you go down that decision tree of what assets are most important to you. Think about this. What do I have that can generate cash flow that I can squeeze to get income from if I need to? How do I tap into those assets? Is there a sequence that makes sense? Is it non-taxable first and then taxable? Is it liquid versus tax deferred? How do I know which pot to go to and how long those assets are going to last? Do I need to worry if I'm going to outlive my assets? And another kicker I'm going to throw in here, because we're of this age, right? Over age 50. You may be in this sandwich generation where you have responsibilities for your parents, as well as your children who are adults, young adults, but adults. If you are sharing your resources, supporting them, caring for them in any fashion, you need to take that into your consideration for how you reprioritize the spending and the sharing of your own resources. And sometimes that's a really hard call, because first and foremost, just like on the airlines, you take the oxygen mask for yourself so that then you can help others. If you are depleting whatever resources need to support you in critical ways, you are really not helping anyone. There's always an element of sticker shock in divorce. One of the predictors of a divorce is very poor communication about money while you were married. And really, how I look at that is to say, how much did you know was going on? Do you know where monies went in terms of which accounts? Do you know how much you've been saving in terms of retirement? Do you know how much it costs you to live? Do I have enough to live through retirement? And if you haven't been communicating with your spouse about these key money questions, which many, many couples in the United States fail to do. You are not alone in not doing this. When you sit at that table in divorce and you look at your list of marital assets and debts for the first time, I call it sticker shock. People just can't believe what's there and what's not there. And they often vastly underestimate how much it costs them to live. So we're looking at the instinct of, gee, I have a pot of money coming to me from divorce. True. But how are you going to manage that so that you don't fully deplete it? It's not going to last forever. And when you look at replacing income, and I talked about squeezing assets, yes, you may be entitled to spousal support or alimony, depending on what they call it in your state. But there's a reality check here. If you are close to retirement age and your spouse or you expect to retire and no longer be earning income, chances are alimony, which is based on income, will no longer be there for you. Sometimes you have options of looking at alimony as an income stream produced by assets, but rarely. So you really have to be realistic. I said really realistic, but you do in terms of not only what you're entitled to, what your expectations are, but what is the law and the standards for where you get divorced. No court can force your spouse to work past full retirement age. If you've been married for 25 years and he's 3 years away from retirement, full retirement age, and you think you may be entitled to 13 years of alimony, guess again, you've got 3-year window. This is what makes divorce as a transition on the cusp of retirement sort of the perfect storm. And it's really challenging financially, which is why I hope that you explore enough options to give you that confidence of how you'll be post-divorce. Surprises abound. Don't let them overwhelm you. Cash flow. Cash flow is different than income. Income is what's generated. Cash flow is when you receive it, right? So there could be a lot involved with looking at when you have access to that income. Does it come, as I mentioned, over a timeline? What produces it? Is it variable or is it consistent? How much can you rely on that consistency? When you take those sources of income and you compare it to what it costs you to live, do you have a shortfall or do you have a surplus? Should you assume and include in your budget a line item to save money for the future, to save money for yourself, or create an emergency fund? As they always say, you need to have something set aside for an emergency, because there's always going to be an emergency that requires some amount of cash unexpectedly. That's the nature of it. Is your current lifestyle realistic? Meaning, you're doing great as a married couple and an economic partnership that's one. When you break it in half, is it realistic for you to assume you maintain that standard of lifestyle post-divorce? This is a big, big expectation of most divorcing individuals. Well, the law says I'm entitled to a comparable lifestyle post-divorce if the resources are sufficient. And if not, you need to manage to what you will be receiving. And is your current employment adequate? Meaning for both you and your spouse. If you have been out of the workforce for any number of years, you know as a woman, you're already behind the 8 ball in terms of parity and equality of earning capacity, of retirement savings, and of Social Security benefits. Coming back into the workforce, no matter how brilliant you are, or how much education you've had, or how long you worked or stayed out of the workforce over the age of 50 is a big challenge. And I will add that during the pandemic, for those individuals who thought they were generating supplemental income to the marriage by doing part-time work, and all of a sudden their spouse has been laid off or terminated, or their business went bankrupt, and now they are the primary breadwinner, guess what? That income is now the sole income for supporting your ex-spouse. Yeah, it's a bad surprise to a lot of people. So there's no excuse for not supporting yourself however you want to and you need to. That's being financially and fiscally responsible. But there's also obligations with your spouse that are in the law and that you should know about and ask questions. If you are contemplating going back into work during your divorce process and have not worked up until that point in time, you know what? This is your benefit. Prove it to yourself you can do this. Whatever the downside is, in the sense of, does it take away from my alimony? Does it do this? In the longer run, it's so valuable to you. Another key part, we're on the third tip here, health care coverage. And let me explain a little bit about what COBRA is. I'm sure most of you know this. COBRA is a legislated federal entitlement that says for any employed spouse, as well as their dependents, meaning spouses, children, etc., if you are working for an employer with over 30 employees and you have health insurance, should a triggering event happen to the employee, that family, spouse, children, and employee have a right to continue their insurance under this legislation for either 18 months or 36 months. 18 months, involuntary termination, disability, whatever. Divorce, 36 months, you are entitled to continue the exact same coverage and insurance you had in place while you were married at a different cost with the same employer. And to do so, you need to enroll with that employer once you have your final divorce judgment and enroll in COBRA so that you can continue your health insurance. You also have choices. Clearly, you can go to Obamacare or private insurers and compare cost and make sure that coverages are comparable and to your liking. So COBRA gives you a window that permits you to remain covered with insurance while you shop around and find alternatives. Make sure you understand that the enrollment period is finite. It's limited up to 60 days from the trigger event, meaning your final divorce. After that, you have absolutely no right to continue it, and don't miss the window. If there is a gap between the COBRA or a private insurance and Medicare, how are you going to cover that? Will you experience out-of-pocket costs? Do you need to have that as part of the conversation in your divorce negotiations? I'm going to be uncovered for 6 months, 8 months, whatever. Can we share in those costs should they arise? And Medicare. Medicare is an entitlement by the government if you've paid into and qualified for 40 quarters of Social Security. If you have never worked, but you meet the criteria for your spouse's Social Security record, which I'll go into in just one moment, then you qualify for Medicare at age 65. If you have never worked and your spouse similarly has no Social Security record, then you purchase Medicare. Medicare is multiple different parts, supplemental plans, other kinds of plans, and you can price it across sort of the spectrum of offerings to find out what's best for you. Now, on Medicare and Social Security benefits, if you're looking to your ex-spouse's record, The Social Security system allows you to say, you may take the higher of 100% of your own benefit or 50% of your ex-spouse's benefit. And the government literally pays out 100% to your spouse and 50% to you, and that's a total of 150% of Social Security benefits. There are specific criteria. You have to be at least, both of you, age 62, eligible to take Social Security. You don't have to elect to take it. You have to be eligible. You have to be married for at least 10 years, divorced for at least 2, and unmarried at the time you make an application on your ex-spouse's record. If you meet all that, go for it. Once you make an election, whether it's your benefit or your ex-spouse's, there's no redo. It's a one-time election. My last point on the tips of what you need to really focus on. How do you look at your asset pool? Once you go through this negotiation or transition in your life of what you will receive, do you understand what you're receiving? What are the options that you have with each kind of asset you get? And the broad ones are cash and bank accounts, brokerage accounts, retirement accounts, a pension, a business, and tangible real estate properties. Many times, there are so many more complicated assets than this. There's deferred compensation, there's annuities, there are different kinds of IRAs, a Roth IRA, a SEP IRA, a traditional IRA. There's ESOPs, there's all kinds of different twists and turns that you can have. It is incumbent upon you to ask the questions. You don't need to know everything about everything, but you need to ask the right kinds of questions. You need to ask, is it liquid? Is there a penalty if I tap into it? Does it require more capital if I take on that asset, like a private equity with a capital call? Am I due to pay in $25K in 2 years? When does it pay out? What are the tax implications of any one of these assets? And let me add this, in the divorce process, fortunately, the IRS has given very unique opportunities for tapping into certain assets that do not exist outside of the divorce process. For example, let's say there are 2 major assets on the table, a house and a 401k. Each person wants to take one, but they're unequal. If you need to get cash out of this 401k to purchase your own home, you have a one-time opportunity to not incur a 10% penalty if you're less than 59 and a half, to get that cash out. Yes, you pay taxes on it, but you can get that cash out as a down payment on a second home. On a refi, does that person have the ability to refi that house to buy you out and share with you that equity? And if they don't, are you on that mortgage? Are you on the title? All sorts of nuances with each one of these assets. And it's not that you come in with all of this jumbling at the same time in your mind. Each one is a step in time. Each one is handled discreetly. And then all those pieces make up a whole puzzle and a picture together so that it's not overwhelming. You're not tackling everything at the same time. Each part will fall into place. And only when all these parts are in place do you have a whole decision to consider and a whole strategy to think about. There are certain kinds of assets, specifically retirement accounts and ERISA governed retirement plans. So let me explain. Retirement accounts like a 401k, a 403b, are ERISA governed employee sponsored plans. They require a certain legal order to divide them. Others, like an IRA or a SEP IRA or a Roth IRA, do not require legal orders. And those are always additional costs. So if you can move around certain funds in different kinds of like assets, it may be cost benefit to you to consider which funds to move around to. A pension is a defined benefit plan, which means you have a future benefit. It can be valued as a present value, taking account of all those future streams of payments, or you could leave it as sharing a monthly benefit in the future, so that literally you are not paying out anything from your pool of assets today to offset it, but you're sharing in a future benefit. That will require a legal order as well, called a qualified domestic relations order. Businesses need to be valued, even if your spouse says, you know what, the entire business is me. If I don't do anything, it has no value. Not quite, not quite. So you would require a business valuation to come in, and an expert come in, value it. They look at cash flow. They look at how to capitalize that value. They compare it to like entities in that industry segment, and they come up with a value. That value is a little nugget on your list of the assets. And is it equal to the house? Maybe. Is it equal to a pension plan? Maybe. But it always has a value. And properties, you can get away sometimes if you both agree on comparables, informal appraisals, valuations. And in theory, you want to make sure that you're on the same page. If you have dueling appraisals or dueling experts, either on the business or on the properties, you know what? There's always a way to get to the bottom of it. If you want to spend as much money as you want to get an answer, you can hire, take midpoints, average, whatever. It's an art and a science. And as much as you would like to have it black and white, there's always a nuance I can pull out of something. So the idea is ask questions and make sure that we will address it to your satisfaction.
All right. Well, we're almost about ready to take, I wanted to interrupt really quick because we're starting to get some questions in.
Okay.
And we are going to hold them to the end because we're almost done with your prepared remarks. But I do want to tell our audience, go ahead and put those in the chat and I will be gathering them till the end. Okay.
Yep. Terrific. So having all of this on your table, right? I think the best thing you can do is find somebody who supports you. Find somebody who thinks, plans, and works the way you do in the best way possible. So I'm, even if you're feeling incredibly ignorant, and please, this comment never needs to happen. It happens all the time. I never handled the finances. I delegated that to him. I feel stupid. I don't know what I don't know. So how do I even start? Okay, we know that. The answer is you are going to be curious. You are not ignorant. You are going to learn. And when you listen, when you try to find the advisor, here's what you need to think about, right? How do you take in information? How do you learn? Is it visual? Is it auditory? Is it some other fashion? Is it written? I mean, do you need to understand things and make a decision right away? Or do you like time to digest it? This is what you're going to communicate to interview somebody and see if they are the right fit. Do they listen to you? How do they react to the story that you tell? Are they actually asking you questions about it? Do they respect your learning curve? Okay, I'm here, or I'm here, or I'm here. Talk to me in that fashion, right? Get me where I am. Do they have clients that are in similar situations, age, experience, marriage, financial standing? How much experience have they had working with a person who has a financial profile like you? Do they help guide you? Do they help you learn? Are they interested in what you're interested in? For example, I manage wealth of a few of my clients. I love listening to what they're interested in. I'm interested in clean energy. I think water filtration is going to be big in Africa. Can we find things that address that. Social, driven investments. I love that when my clients are that interested that they can come to a table, having known nothing earlier, and say, this is what I want to do. Asking the right questions to make sure that you've covered your blind spots. For example, an advisor who might be the wrong fit would say, you know what? We're going to put all of those eggs in one basket. It's going to preserve your income, reduce your costs, and we have a model portfolio. And here it is. It's portfolio A, because you have $250,000. If you had $500,000, it'd be portfolio B. Does that sound personalized and tailored to you? I mean, how do you know what that means? So be picky in what they tell you, right? Ask, find out, where are their biases? How are they compensated? Do they have a series of investments that they need to sell on behalf of their firm? Do they get a list every single day that says, go sell blah, 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 blah? Dangerous. If you need attention, ask for it. Make sure that this person who's going to be your guide for however long, maybe you test them and they're not the right fit, but you know what's wrong for the next interview. You want to make sure the fit is good and make sure that they explain things to you in the way that you need to understand it. Okay, so I think your key takeaways should be from this entire presentation. Prepare, understand your finances from the get-go as best you can. Start reaching out to build a team. And my final comment to you is going to be, you know what? Realize that there's no one person you can count on more than yourself. So be accountable and be responsible. All right, let's take some questions.
All right, so we have some good questions here. There's a very specific question that I'm going to kind of leave to.
Can you read them to me, Marcia?
Yeah,
because I'm not going to open up
absolutely.
the chat box.
Yeah, no, it's totally fine. So what I'll do is I'll go ahead and read some of these, and if we don't get your question or if it's a little too personal, we're going to go ahead and address that privately so that it's not in a public forum. So first of all, a question is, do you know why gray divorce is so common, and why it's increasing? Have you heard any reasons why people have seen a rise in that?
So there used to be the preconception that you have your children, you've stayed together, married long enough, and once the children leave, you have nothing in common. I would challenge that. I would say that really the triggers for divorce at age 50 are the same triggers that are prevalent throughout any age. It's you're suddenly realizing you have a whole lifetime ahead of you with longer life expectancies. At age 50 and maybe going into your 90s, you're thinking, holy cow, I've got 45 more years. Do I really want to spend it this way? And many of the individuals in this age group are sort of from, the time of where there was the whole concept of challenging society, being free, creating your own space, being an individual. And I think that's come back. I think people feel disenchanted, being unhappy. And the stigma of divorce has really eroded. I mean, there's very little social stigma for people who say, oh, gee, I'm getting divorced, when it's 1 in 4 and practically everyone has been through something. So I think that's just opened the floodgates. I think people are raring to go out and say, you know what, it's my time. I deserve this. I want to be happy. I'm going to figure it out and I'm ready.
All right. So you talked a little bit about being overwhelmed with all the things that you have to do. And let's say someone is just, for example, I don't even know where to start. So they're at the beginning of this journey. They're not divorced yet. Can you give maybe like 1 or 2 first things that they should do?
So this is not a promotion. I'm not saying this, but for that exact reason, the American Bar Association asked me to write the book of Money and Divorce. Step 1, 2, 3. Exactly that. What do you do when you're starting from, ether, so to speak, and going into it? The first step is you gather your financial information as much as you can. You never put yourself at risk by doing so, like breaking into, someone's computer or going into a safety deposit box or opening someone else's mail. No. I'm talking about what's readily available. Learn, gather it, take copies, make sure you start to ask questions. The second point is learning about your own state and basic divorce law. And it's on every state's .gov website. You go under the judicial department of your state and it prints it all out. Here are property rights, here's alimony, here's how long you have to be a resident to even file for divorce. What are the alternative legal processes in order to become divorced? And I think just starting with eliminating the fear that a transition will happen by having homework and sort of that to-do list. I even have a book that I had just to-dos checks. Is really helpful. It keeps you grounded by what you need to know and learn, rather than going into this spin of negativity.
All right, thank you. That's really helpful. This I have several questions from this individual, and so I just want to address one at a time here. Can you address how Social Security works if you're divorced? How you can collect on someone's work record really quickly?
So again,
If you haven't worked yourself, I guess I should say that.
So if you've been married for 10 years, if you and your spouse are at least 62 years old and your spouse is eligible for Social Security, and you are currently unmarried, and you've been divorced for 2 years at least, then you can apply on your spouse's Social Security record. Do you need to have their Social Security number? Yeah, it's helpful. Will you know what it is? Probably not. But there's easy ways to apply on your spouse's Social Security record with Social Security office. And it's online, and you can go to your local office. What you will need is your marriage certificate, as well as your certified divorce copy of the judgment. And I think that's it. But don't take me as a Social Security expert of what they ask you to bring in. You should go online and find out.
That's correct. Yeah. All right. So here's, I'm trying to make this a little more applicable to everyone. So to this individual, if I've said it wrong, please write in the chat and correct me if I've done it wrong. So let's say you have a pension, and in the divorce, the pension was split. Can you go back and revise that? So can you go back and say, for example, if the pension was split in half, but you realize you're going to need all of that pension, can you go back to the divorce court and have that quadro, I guess, have it revised?
So there's two parts to this. If the pension was split before the recipient or the employee or the pensionee was receiving it, then it was probably divided as an asset. And once you divide your property, once you divide your assets and your debts, there's no do-over, period. If the pension was in payout status and it's part of your alimony and you are entitled to half of it, let's just pretend half of it because it's already being paid out and he's supposed to cut you a check for half of it, or it comes directly from the pension payer, then as alimony, you may have a chance to revisit and modify if your agreement allows for modification of alimony. So I don't know the exact details, but that's pretty broad.
All right. And I would just also say that neither of us are attorneys. And so this would be definitely a legal question to reach out to your attorney to
Correct.
make
Always.
sure that, because every state is going to be different, every agreement is going to be different. And, it's all individual. So speaking about an attorney, of course, you will need an attorney when you divorce, or if you are already divorced, it's always good to have an attorney that you trust. What other people besides a financial advisor would it make sense to have on your team of professionals?
So let me just qualify financial advisor. So I am trained as a divorce financial planner, which is very different than a financial advisor or a wealth advisor. I study all of the criteria for our state divorce laws and those states that I practice in. I belong to various bar associations as an associate member. I train with legal professionals. I testify in court about financial issues. I am trained as a mediator. I'm trained as a collaborative financial specialist. There's a huge amount of training experience that is unique to the divorce process, of which I am a divorce financial expert. So a financial advisor who is managing assets, who is producing budgets, who is helping invest whatever, may not have any of that experience or knowledge specific to the divorce arena. So be very careful you don't, mix up the two. As a divorce financial expert, depending on the hat I wear, whether I'm a mediator or I'm a neutral in the collaborative process, I do not and have no right to serve after the process as a wealth advisor. Only when I am an advocate for a client do I have that capacity ethically to continue a relationship. So there are many financial advisors who may say, I'd like to tell you that you need 100% of the assets. And oh, by the way, you need 75% of that income to live. And as long as you invest with me, I don't charge you for my advice. It's biased for the most part. And it's really disingenuous, because what they're not doing is giving you reasonable, practical advice that you can take back to the table. And it undermines what your lawyer is trying to do with you in terms of strategy. This is a very difficult arena to practice in because of the emotion, the law, and the finance all come together. And without that training unique to that process, you need to be sure of who you're working with.
And I think what else we wanted to talk about was what other professionals might
Oh,
be
I
helpful.
apologize. I got
Yeah, that's okay. That's the
It's
one.
such a hot button
We
for me. I get
qualified
carried
the
away.
financial
All right.
advisor. That's
So
fine.
again, there are 4 processes for divorce. They're all legal because a marriage is a legal organization. So you have to undo that legality, right? So you have a do-it-yourself divorce. The two of you, if you have very few assets, no children, simple, you do it yourself. The next step up is mediation. And in a mediation, a mediator could be a financial expert like myself. It could be an attorney who's a mediator. And they are a neutral person who's making sure you all sit at that table to negotiate a settlement and helps support you, but does not provide advice. Always in a mediation, you're encouraged to have your own separate counsel, whether it's an hour or throughout the entire process, to give you the advice that you need. There's a hybrid called collaborative. In a collaborative, you each have your own attorney, all specially trained, a financial neutral, and a mental health professional. And all of us sit there as a team to help the two of you over the finish line, addressing every aspect of the divorce. And then there's traditional litigation, where you hire your attorney, and they may bring me in as a financial expert. They may bring in a valuation expert for a business. They may bring in a vocational expert to test your earning capacity and your skills. So the team you start with is always going to be an attorney and probably, I'm going to say, a financial person to help you organize yourself and your story so that you know at least your basic needs by the time you meet an attorney to communicate intelligently.
All right, we have time for a couple more questions. Just a second, let me scroll up here. All right, so what sort of arrangements do you need to make if you are separating? What sort of, and not divorced yet? Because sometimes I know in many states, divorce takes a while, it's a process. So can you talk a little bit about
I'm assuming
financially?
we're talking about physically separating.
I believe so. I believe so.
Okay. So I think the first and foremost thing you do is have a conversation. Who has access to what accounts and credit cards and assets? How will bills get paid? What's off limits, so to speak? And is the status quo going to be maintained while you physically separate and decide how and when to enter the divorce process? So that kind of implicit agreement doesn't need to be documented, but it serves as goodwill and intentions of going through it honestly with transparency to make sure that the other person isn't thinking fearfully or with high anxiety that something's going to happen where insurances are stopped, credit cards are closed, accounts are closed. I have no longer any online access to the accounts. That's the worst situation, right? That's what you want to avoid at all costs.
Sorry,
These
I
are
didn't
great questions. No,
unmute
you're
my,
good.
yeah, no, these are very good questions. And then here's a question about families, so adult children or children that are in college. What's the best way to handle that in the divorce? So obligations, financial obligations to adult or adult children.
Well, generally speaking, and this is actually very interesting because in many states, there used to be child support that was only calculated through the age of majority. And in some states, the age of majority is 18 upon graduation of high school. In other states, the age of majority is 21. And there's probably no state I know of that has an age of majority after you finish college. So what it really calls into question is, if you divorce while your child's in college, who has the obligation to continue paying, right? Because if you're not obligated to pay child support, are you obligated to pay anything else? So that's one of those gray areas where if, historically, and the precedent has been set that you set aside monies that you've been paying for, blah, 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 status quo is generally maintained by the courts. You just don't cut off a child from the college. Although I have had a client here or there that said, you know what? I don't want to fund this any longer by taking money out of our retirement accounts for our last child to go to college, because now that we're divorcing, I want the money for myself. So instead of going to, a state school or an Ivy League or whatever, they're going to have to go to a community school because that's all I'm going to contribute to. So know what your state requires in terms of a minimum amount of college cost. They're across the board, and this is great for children, and this is why it was enacted. There is legislation in most states now that says you have an obligation as divorcing parents to discuss how you will handle college costs. It doesn't obligate you to do something. You have an obligation to discuss it in the divorce process.
Okay, and this is the last question we have time for. And I know that we discussed, Lili, you and I, that most women who are divorcing or divorced have an income gap. And so can you talk about what you have seen, maybe give some hope to people who are embarking on having a new career after divorce, or as they're going through the separation process? Hopefully end on a happy note here, because I know it is a new life for people and they want to be happy.
I want you to be happy. I want you to have the excitement that you're doing it for yourself. Sometimes in the divorce process, recognizing that you have a willingness to become yourself and independent and embark on something uh, diminishes the disincentive for you to do so. In other words, if you start earning $30,000, will it reduce my alimony? Maybe, maybe not. Maybe that's the kicker for that person to say, gee, I'm happy that you're going to be out there doing that. And yes, I'll give you that window of time to get on your feet, get out there, figure out what your earning capacity is. Happy to do that. I want you to succeed. Sometimes not, but I think in the divorce process, what you want to do is make sure you know at least some of the basics that you may require in order to start testing what you're interested in, where you go, what it's going to take. So if you need to go back to school, could the cost of school be included in the divorce process? If you have to get recertified, if you have to explore different kinds of options by perhaps even relocating, is that part of the divorce negotiation? Just think ahead. What's it going to take? Have a little bit of fun thinking about, wow, this is my time. I'm going to be doing something that I really enjoy. And you know what? I have every opportunity to have the world open to you. So the world of possibilities is yours.
Well, on that note, we do have to end our webinar. I will say that if you have a burning question, go ahead and leave it in the chat. I will save the chat, and we will make sure someone reaches out to you after today's event to make sure that gets addressed. On behalf of Advice Chaser, I want to thank Lili for being here with us today and the organizations that have worked with us to bring you this webinar today. Thank you again for attending. Look for an email soon with a link to the replay of this event, and you're welcome to share that replay with your friends and family. Here at Advice Chaser, we're all about helping you find a financial advisor who is a great fit for your life and your financial questions. Our matching service is free to you, and every one of our advisor partners has committed to offer a free initial consultation to anyone we introduce them to. Find out more by going to advicechaser.com and clicking on the link to find an advisor. Once again, from Advice Chaser, thank you so much for coming, and we will see you at another webinar soon. Goodbye, everyone.
Bye-bye.